So as you can see, Vimy is going to be saving the world. A difficult job, you might say, for a junior miner, but in some way being part of what is the climate crisis and be able to deliver relatively large quantities of low cost, low emissions fuel to the nuclear industry is the basis of that statement. Now, why is this so? Well, nuclear power is on the rise. Clearly, there's been a disconnect over the last 7 or 8 years where the supply has outstripped the demand, which in some cases went backwards. But the indicators have changed for the first time. And in my background, it has been in uranium for 10 years, not necessarily with Vimy. I only joined in March this year, but I have been heavily involved. So with the change in these dynamics, what we believe will happen is that there will be a significant shortfall of supply to meet that demand from 2020 onwards. It's a given that the security, this is a key takeaway from this short presentation, it's the security of uranium supply will always trump the price. There are uranium buyers in the utilities that have one golden rule: we will never run out of uranium. So no matter what happens, the price will go up, the uranium buyers in these utilities will be buying, and this will start again, we believe, in 2020. Now then the next question is, why Vimy? Well, the answer to that's quite simple, that we have two of the largest near-term uranium mines in Australia. These projects, particularly Mulga Rock, is advanced. It's at a DFS stage. It has all the fundamentals, the robust economics around it, which will enable us to get this to FID and then into construction and production. It was mentioned a bit earlier today about the importance of management teams. I'll talk to that. I think we've got a great experienced team. Jurisdiction's important. Being in Western Australia and the Northern Territory in Australia, we think that's definitely a first world jurisdiction. And of course the projects have to be able to support the economics and the ability to fund. Quickly about the company, we're a small company with 600 million shares on issue, about 30 million in market cap. For a small company, we've got a strong balance sheet, approximately 5 million in cash. We have a share purchase plan that closes next Monday, and we hope to raise 1 to 2 more on the back of that, so we will be in a strong position. This is really important if you're looking at uranium, if that's going to be your space, because you want dollars in the ground. You want exploration, you want results, you want news flow, and that's what Vimy will be providing over the next 12 months. In terms of the share register, I think we've got one of the strongest around. You'll see a lot of these as you go to talk to these companies. Few of them will have the shareholders, I should say, that are better known and more respected than the ones on our register, starting off with Andrew Forrest through his Forrest Family Investments, Paradise Investments, and then a broad range of funds in Australia and in the US that are in the company, including companies that may not be so well known to you, like Sachem Cove and L2 Capital and FF Alcram, but well respected and investors in uranium, and don't just invest in any company. The board, headed up by our non-executive chairman, the Honourable Cheryl Edwards. Our CEO and Managing Director, Mike Young, would be probably well known to many people at the conference and probably people in the room as well. And I won't go through each individual, but you'll see them there, including myself. It's a very experienced team in bringing mines into production. So why uranium? Why talk about it again? Everyone's been talking about it every year for the last 10 years, and it's about to come back. What's changed? Well, it's the shortage. The demand's been growing slowly. The WNA have predicted, at the worst case scenario, about a 3% growth rate. But what's happened is that these inventories that have been hanging around, being sold through the spot market at low prices, are being extinguished, and we believe that the indicators are very strong. To give you an idea of supply and consumption, there's a couple of charts there. I'll just point out that Australia is the third largest supplier and the US is the major user. Varies between 45 to £1 million per annum, and they're the strong counterparties that we're looking to do contracts with. So what's driving the other side of this equation? I've spoken about a shortage of supply, and that's demand. As you could imagine, there's a lot of, there's 444 operable. There's 495 proposed or planned. That's more than a doubling. The reality is they won't be built. So let me make that point, because it's pretty straightforward to talk about we're proposing. What's really important in these graphs is those that are planned and under construction. We're talking 165 there. Now, if you're going to go from 440 to over 600, that's a massive increase. Now, this will be a trickle-in affair. China, they take a long time, they take a lot of money, but the demand is going to grow, and it is committed, and it'll be led, of course, as you'd expect, by China. Possibly 247 million pounds of additional demand, currently about 170. Even if that grows marginally, without 3.5 million pounds per annum from Mulga Rock, we think we'll find a home for it. So it always needs to be spoken about, and that is the uranium price. I've been involved in Canada in uranium back from 2009, and every year I get asked the same question, regardless of my role. Why is the price low? When is it going to turn? So we use these, what we call street consensus outlooks. We take 12 of the major analysts and broking firms who put forward their forecasts, and we map them. And you'll see there that we've been pretty fair. We've taken the high, the low, and the middle. And the projections, which have been shown before, indicate modest increases through this year. This was done in August, so it's a little bit old. Moving into the 40s and the 50s, which is the sort of the incentive price for a lot of projects, including Vimy. So let's talk a little bit about our mines, because I want to give you that information today. Mulga Rock is Australia's largest near-term advanced uranium project. We have a very comprehensive DFS that was released last year. The DFS was done at $60. I compare that to our market cap of 32 today. It's a large resource. There's 47 million pounds of production coming out. You can see the resource and the reserve. A point of distinction to nearly all other projects is that it has full mining tenure. It has environmental permits at the state and federal level. We are working on the secondary permits at this point. So it's from FID to first production 2 years. There's a lot of projects out there. I'll show you some of them on another slide. Secondly, Alligator River Project, which was acquired from Cameco. This is a high-grade, world-class deposit. It has a resource and scoping study, and it has great prospectivity to increase that resource. I'll talk to that. So I'm just going to run through these very quickly because I'm going to run out of time. Mulga Rock is, as I suggested, a 15-year life of mine, a DFS, significantly de-risked. Test pits, pilot plant. It's simple, low-risk operation. Simple geology, simple mining, and simple metallurgy. Here's the key metrics from the DFS, and you'll see that 3.5 million pounds is annual production. That's enough to power, say, 7 1-gigawatt nuclear reactors. All-in sustaining costs of $30 across the first 5 years. Contracts currently $32, so you can see it's a little bit underwater. And the project readiness index, this is a good slide. I've got time to talk to it. You'll see here all our peers on the left, on your left, I beg your pardon, and down the bottom, the criteria. And most of these projects are at various stages of readiness. But there's only one project out of all of them that meet the 10 criteria, and that's the Mulga Rock Project in Western Australia. So in terms of meeting and being able to benefit from the turn in the uranium price, there's one company in Australia with the Mulga Rock Project, and that's Vimy. Very quickly on Alligator River, it's very similar to the Athabasca Basin, as most of you would be aware of. It's a similar sort of deposit to Ranger, and it has a maiden resource, a scoping study, and multiple prospects. The beauty of this project is the grade. I've worked in Namibia. I was working between 200 and 400 ppm. This is 13,000. 13,000 ppm. I'm happy to just quickly go through these two slides, a few seconds. This is a target-rich environment. It's going to require us to go to the Northern Territory, the best location in Australia to do exploration, and you can see the number of targets, prospects, and drill-ready prospects. In closing, our milestones, we are doing an update to the DFS, and that's happening now. It's fully funded, and we hope to optimise the project, reduction in CapEx, and maybe look at other ways to do the OPEX, and of course, an extensive, fully funded drilling program at Alligator River. Thank you for your time.